You're listening to Flip Empire, the show committed to helping real estate entrepreneurs who want to build their empire without sacrificing their life. Your success and freedom starts now with your host, Alex Pardo.
This is episode 639. How are you, my friends? I want to welcome you to the Flip Empire show. If this is your first time joining, my name's Alex Pardo. I have been an active full-time real estate investor since the end of 2005. So I've been at this a while. I've already been through a downturn of 2008. I've seen what a market crash looks like. And I want to start by this particular podcast episode by just, in case you haven't heard this yet, it's going to be okay. Right? I see so much fear in the streets, figuratively, right? I see so many people, the conversations, no matter where I turn, circles them in, always circles back to the market. And with good reason, right? Inflation is higher than what the media would like you to believe. In fact, on Monday, I'm going to have my good friend Tracy Royce of Real Estate on the podcast. And we talk a little bit about this. We talk about the market, how to position yourself. But, you know, with some people you talk to feel we're already in a recession or we're heading into a recession. We're in a rising interest rate environment. And sellers are starting to get a little bit more motivated now. Conversations I'm having with a lot of our Ascend members that are just doing some great things in their communities. They're starting to see now sellers that rejected offers months ago are now coming back to the table and saying, hey, is that still on the table? And so it's very interesting how things are shifting from what we've seen in a seller's market for the last several years to now slowly becoming a buyer's market. So look, is the market changing? Are things turning? Yes, absolutely. I don't think there's any question about that. Now, we can debate all day long about, is this going to be a crash? Is it going to be worse than 2008? Is it not going to be? I've heard all different types of things. This is why I always have said and will continue to say the best investment far and away that you can ever make is in yourself and in the communities you surround yourself with. Now, that is not, hear me loud and clear, this is not an indirect way to plug Ascend. Forget Ascend, put Ascend to the side. You need to make sure you're immersing yourself with the right types of people in the right communities. This is why, regardless of what the market does, I'm confident because I've invested in myself. I've invested in my personal development. I've invested in the coaches, the mentors, the mastermind communities that I'm a part of. And so I have confidence. To me, I view them as my ultimate insurance policy, that regardless of what the market does, I have the confidence and the belief system myself that I'm not only going to do well, but I'm going to thrive during those market downturns. We've all heard how money isn't lost. It's merely transferred, and it's transferred to those who have been very thoughtful and intentional about investing in themselves, putting themselves in the right communities. And so let me just go ahead and share that putting yourself in the right community, surrounded yourself with the right person is, like I said, the best investment you can make. Having said that, there are some things you can do to start to take advantage of the downturn and to start to position yourself. And there's just a few that I want to highlight here. Number one, if you listen to this, you're an active real estate investor. You're probably a wholesaler, fix and flip. There's also a lot of commercial and storage investors that have, joined and now listening to the podcast. You need to adjust your underwriting. You need to adjust what you are offering to sellers. And so it's super important that you have continued to pour into relationship capital with the top agents in your market, with brokers. That's one of the things I'm doing in the storage world now is I'm constantly reaching out to brokers, not necessarily to get a deal, although that's a part of it, but to build relationship, to plant and water the seeds, to get their insight and perspective from guys who have been in the storage industry for 20, 30 years, to get their thoughts on how are they seeing this market? What are they, we're seeing cap rates rise now, whereas people were making offers at 5, 6 caps. Now we're seeing them adjust to 6.5, maybe 7 caps. So the relationship capital is by far and away the best currency you can have, especially in a changing market. Whether it's, again, that ties back into the communities like Ascend, or it ties into the relationships that you have in your local market or national, if you're doing deals nationally like I am. So relationship capital, make sure that you're planting seeds with the right people. I can't tell you how, when we were at Ascend in Dominican Republic last month, we talked about how broker and agent relationships have played a pivotal role in a lot of our members' success, where the fact that they can pick up the phone and say, hey, look, this one just fell out of contract before I relist it. Do you want to crack at it? Or you being able, vice versa, to pick up the phone to an agent and say, hey, I saw that this one pending. Can you give me some guidance here? Give me some insight. I recently put in an LOI, a letter of intent, on a storage facility, and I was able to call the broker and say, hey, give me some guidance here. What do you think this is going to trade for? And it's because I've poured into the relationship. It's because I've added value. It's because I've executed, right? I've performed. When you say you're going to do something, follow through. The worst thing you can do is say you're going to do something and then back out, because your name and your reputation is extremely valuable. It's hard to build up and it's so easy to get torn down. So make sure that you're in touch. Make sure you're building relationships with the right people. Make sure that you're, in doing so, in building those relationships, you have an opportunity to kind of read the tea leaves, and that will allow you to adjust your offers. Now, the second thing I think you need to do is creative financing is going to be so important, I think, in the next 3, 6, 12, 18 months. Being able to not just offer sellers one type of offer, right? Like, that's one of the biggest challenges I had with wholesalers is wholesalers, by and large, only know one way to make an offer and buy a property, and it's a cash offer. And guess what they're going to say? They're going to say, we cover closing costs, we cover fast, or we close fast, we close on your timeline, no fees, no commissions, blah, 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 right? Like, that's what every wholesaler says in their marketing. Just pick up any number of marketing pieces and they're going to basically say the same thing. And so your ability to structure creative offers, seller financing, lease options, things of that nature is going to put you in a better position to close deals and ultimately succeed. Just recently, in fact, I don't have quite the news to share with you yet, but I'm pursuing a storage facility. And one of the things that I'm pretty confident this is it's going to happen. One of the things I looked at and I realized is when you get a deal that you want to close on, sometimes we're anxious to get it to the finish line, and we want to put ourselves in a position to line up everything, get it closed. And I quickly realized that, and I noticed, I said, let me take a step back and let me kind of drink my own Kool-Aid, meaning let me take my own medicine. And so I looked at the deal and I said, what are all the assets and resources that I have to bring to the table here? And what ultimately do I want, right? Like, do I want to put my money into this deal? Do I want to raise capital for it? Do I want to potentially give away a small piece of the deal for the down payment and for the CapEx needed? So whenever you have an opportunity to get a deal under contract, take a step back and ask yourself what you bring to the table. What are the resources you have? Ask yourself what you want, like what's the highest and best use of this deal, how to best structure it. And then that will ultimately lead you to figuring out the best way to put the deal together versus having that motivated seller or motivated buyer mentality where you grab the deal and the next thing you want to do is you just want to get to the closing table. I see too many people just giving up so much of the deal when if they just would have taken a step back and say, hey, what's the best way to structure the offer? What's the best way to structure this partnership? One of the things I'm considering doing on this particular deal is not bringing on an equity partner, offering a reasonable interest rate, right, for on the debt side, but to offer a greater piece of the depreciation, right? So like if there's somebody out there that's a high income earner, is not a real estate professional, not an active real estate investor, but they need a legitimate way to offset their taxable income, is maybe give up a piece of the depreciation in exchange for some of the capital. So there's so many different ways to structure these deals creatively. But that kind of leads me to the last thing I want to share with you. Regardless of what the market does, if you focus on the relationships, if you can read the tea leaves of wherever you're doing business and you understand what's going on, you stay ahead of the curve by looking at stats. If you're a wholesaler, fix and flip investor, days on market, pending, have there been price drops, staying in contact with agents, all of these are useful tools that are going to help you and position you. But the other thing is having access to capital, right? Lining up private lenders, lining up people that you can tap into, getting lines of credits on investment properties, right? Number one, it shows as they're encumbered in the public records. But number two, it gives you the ability, it gives you more purchasing power if you see an opportunity that you want to take advantage of. Lining up joint venture strategic partnerships, potential equity partnerships. In fact, today I had a conversation with somebody about maybe giving them some depreciation in exchange for some capital. So having those conversations, digging your well before you're thirsty, these are the types of prudent, practical things that I think you can do to take advantage of the market downturn. But remember this, if you remember nothing else, don't operate out of a place of fear. Okay. Now there is something to be said for like Warren Buffett. You know, you want to be fearful when others are greedy, and greedy when others are fearful. That's not the kind of fear I'm talking about here. I'm talking about the kind of fear that's paralyzing, that puts you on the sidelines. Now, I do know there are some investors that I respect and trust that are sitting on a bunch of quote unquote dry powder, right? They're sitting on a bunch of capital, but they're also in a different position, right? Where they have the cash flow coming in, they have the assets. So I think it's important that you're really honest about where you are and ultimately where you want to go. And that will help dictate what kind of season you might be in, right? You might not have the luxury of sitting on the sidelines, or you might be in a position where you've really positioned yourself over the last 5-6 years, where now you can kind of sit on the sidelines and look for opportunities, be more selective. But that only comes from knowing what you want, putting yourself in the right environment, surrounding yourself with the right kind of people. And then you got to go out there and make it happen. Right. That goes without saying. So hopefully this episode wasn't too scattered. I was in the process of trying to organize my thoughts in real time as it relates to this, because I wasn't planning on having this conversation with you today, but I literally just got off a call not too long ago. And again, it was about the market, and with good reason. I totally get it. But I'm sensing people operating out of almost a distress, like what's going to happen? What are you doing? It's like, dude, take a breath, chill. Let's have the conversation, but make sure that you're not projecting any of that fear and anxiety, because it will impact how you operate. And hopefully that strikes you between the eyes, because I wholeheartedly believe that. So with that being said, my friends, we talk about communities. Clearly I am biased, but I think with good reason. If you connect with any of our members who are just first and foremost incredible people that lead with their heart, people that desire to impact and give, which are just a few of our core values. Just can't speak highly enough about the community that we have. And if you want to align yourself, learn more about that, ascendyoursuccess.com. And with that being said, so look forward to connecting with you on the next episode. Take care. Hope you enjoyed that episode. But before you go, I've had a lot of people recently reach out to me wanting to learn more about Ascend, wanting to understand how the mastermind component works, how the coaching relationship works. And so right now we're actually on a waiting list. But what I would encourage you to do is, if you think you're the right fit and you think you could benefit from being a part of our community, head over to ascendyoursuccess.com, watch the short video, and then just click the apply to join button below. And then we'll be in contact with you if and when a spot opens up. So really appreciate you listening to Flip Empire here, and I look forward to connecting with you on the next show. Take care.